JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF, one of the best higher income ETFs across the entire market that a lot of you guys probably hold in your portfolios, and one of the greatest premium income ETFs of all time, is not necessarily one of the best ETFs or one of the best options anymore, and this is due to so much other competition coming out just in the most recent months. Now, I personally hold a ton of JEPQ and plan on holding it long term. I'm up significantly on my positions, and JEPQ has paid me and is still paying me a nice amount of income every single month. But in today's video, we are going to explore why some investors might think that JEPQ is no longer the best ETF and what other ETFs out there might be better. Now, I promise you guys, there's some really good information in today's video, so if you hold on to JEPQ, or maybe have ever thought about it, make sure to stick around until the end. Why should you join as a devoted Dividend member? Well, if you want access to information such as every stock or ETF that I currently hold, and alerts to all the stocks and ETFs that I buy daily, along with having access to my custom dividend tracking spreadsheet that you can use to track your dividend income, oh yes, and also my dividend investing ebook that has already helped hundreds and hundreds of dividend investors start their journey to building wealth. Or what about having access to talk to me one-on-one about dividend investing, or even to perhaps go over your portfolio? Get all of this and so much more by becoming a YouTube member today. I'll see you guys inside. Now, before we go through and explore why JEPQ maybe is no longer one of the best premium income ETFs, let's sort of first explain why JEPQ does offer a great opportunity for income-focused investors. Now, JEPQ has a nice long track record with a nice performance historically. The ETF is seeking consistent premium income with lower volatility, which it basically has done. Now, JEPQ also offers Nasdaq 100 exposure through an option income strategy, which gives investors, of course, Nasdaq 100 exposure, but instead of upside necessarily, a lot more income generation. Now, the 30-day SEC yield is offering around 10%, and JEPQ is pretty cheap to hold on to, especially considering what it offers. Like I said, the performance is also there. JEPQ on the 1 year is offering almost 24% return. Since inception, around 55%. So again, it's very hard to argue that this ETF is not one of the best premium income ETFs across the markets. But not so fast. I did come across this article on seekingalpha.com. This is from Kevin Shan, so shout out to them. It says JEPQ is no longer that attractive. I had to read through it and I had to share with you guys because this is too good to pass up. Now, Kevin said, I'm downgrading JEPQ to a hold due to other Nasdaq 100 income funds offering a mixture of better tax advantages, more consistent distributions, and stronger total returns. JEPQ's distributions are mostly taxed as ordinary income, unlike funds like some of my favorites and like a lot of your guys' favorites, QQQI or GPIQ, which use tax loss harvesting to offer more tax efficient returns via ROC and of course Section 1256. Also, the introduction of zero DTE funds has also provided alternatives that yield more and show stronger ability to capture upside in the Nasdaq 100, names like QDTE for example. This writer also said I wouldn't necessarily sell my JEPQ if you already own it, but new investors should consider other Nasdaq 100 funds before JEPQ. Now, as a JEPQ holder and as a lover of the ETF, even so far, I sort of agree with all this. Kevin then said there are a lot of good investments that provide good solutions for certain situations. The JEPQ Nasdaq Equity Premium Income ETF JEPQ is certainly one of those good investments, providing a good solution for those seeking both income and growth with tech exposure. Since inception, it has amassed over 22B in AUM and historically paid out monthly distributions, yielding anywhere from around 9 to 12% annually, while offering prospects for capital appreciation. The ETF over time since I started holding on to it has went up, which is awesome, but it's also been paying me a ton every single month. He then said if you bought JEPQ at its inception during May of 2022, which I did, you would have seen your principal grow approximately 17% and total returns of around 58%. With these kind of returns from an income fund and no immediate foreseeable headwinds that would incite an investor to sell their JEPQ position, then why am I downgrading my rating for JEPQ? He said the reason is that while JEPQ is good, many other funds launched since JEPQ's inception that accomplish the same goals but better. In particular, new funds exist today that perform similar to JEPQ, but either offer a mix of tax advantages, higher yields, better ability to capture upside, and more consistent distributions, which I 100% agree with. Now, that is not saying that you should sell off your position and replace it with other positions, but again, the advantages aren't necessarily significant enough to justify any capital gains you might take. For investors starting a new position though, consider alternatives like QQQI, GPIQ, and QDTE, which I personally hold all of. Now, he then went on to write that JEPQ strategy and why other funds offer more benefits. JEPQ is a fund that seeks to deliver monthly distributable income and Nasdaq 100 exposure with less volatility. It constructs a sizable portion of its portfolio based on Nasdaq 100 index, though it's critical to note that it doesn't actually track the index in replication and sells monthly out of the money or OTM, covered calls in the index, or related ETFs via equity linked notes or ELNs, of course, per its prospectus. The fund will invest up to 20% of its portfolio in these ELNs and hold the rest in equities. It charges a 0.35% management fee, which is one of the lowest in the covered call funds, which I said earlier, and the results so far have been good. We'll naturally see the fund unable to completely match the NASDAQ 100 due to the covered calls capturing upside, of course, but the fund does offer some downside protection as we've seen historically. Now, the problem with JEPQ, however, is that its performance have been nearly identical to those of the NEOS NASDAQ 100 High Income ETF QQQI and the Goldman Sachs NASDAQ 100 Core Premium Income ETF GPIQ. Yes, there is a minimal history due to the comparison because both those ETFs are relatively new, but we can reasonably expect similar performances going forward with all three of these funds implementing strategies of selling NASDAQ 100 covered calls for income while balancing prospects for capital appreciation. Now, it is kind of crazy if you compare the three, at least during the timeframes that we have to go off of. They have traded very, very similar, but again, like this writer said, certain of these ETFs offer things that JEPQ doesn't. Now, he then went on to explain that he said with the three funds, total return almost identical to each other, the choice between each lies on characteristics of the funds. The first one I'll discuss is tax difference. Both GPIQ and QQQI make use of tax loss harvesting tactics that allow them to report significant portions of their distributions as return of capital. The benefits generally mean that your ability to defer paying taxes with return of capital distributions and lower your investment cost basis instead. JEPQ's strategy of using ELNs, however, leads the fund to distribute majority of its income as ordinary income, which is one of the main points a lot of investors use when they sort of criticize JEPQ. Now, JEPQ paid $809 million in ordinary income distributions. Only 61 of the 809 received reduction tax rates, as those were qualified dividends from the underlying equities in JEPQ. He then explains that for some investors, tax efficiency is going to be very, very important, but as always, talk to a tax expert and also realize that every single person's tax situation is going to be unique. They then said taxes are not the only benefit QQQI and GPIQ have over JEPQ. These two funds are also anticipated to be far more consistent with their distributions, and 2024 has demonstrated that to be the case. Now, the reason behind QQQI and JEPQ's more consistent distributions is because their strategy provides a target yield around 14% and 10% at the time of writing this. JEPQ, on the other hand, is more focused on moneyness range, and they'll adjust it depending on market conditions, but ultimately sell calls via ELNs in their predetermined range. Hence, if you calculate the standard deviation of the dividend payments from each fund, you'll find that JEPQ with the most volatility in its payments at 7.79% versus GPIQ and QQQI's at 1.61 and 1.53 for income investors who rely on their ETF distributions for living expenses, which I've talked about so many times in videos. These other ETFs offer a more stable, easier way to budget because your income is going to fluctuate very, very less. Now, Kevin lastly said it doesn't mean that JEPQ is necessarily a bad fund to invest into, though it's just not great. Both GPIQ and QQQI are funds that offer similar performances, but with more consistent and tax-efficient distributions. Other NASDAQ 100 covered call funds, in particular the zero DTE option funds, have also emerged, showing its ability to capture more upside while distributing more income. I wouldn't necessarily again sell the ETF, but he then says to consider other ones also. Shout out to Kevin, that was an amazing breakdown and honestly took a lot of things out of my brain, which I talk about often when criticizing JEPQ personally, even though of course I'm a holder. So with all that being said, a lot of us income investors that either hold on to JEPQ or maybe have been planning on grabbing a lot more JEPQ definitely have some important things to think about. Because after all, just like Kevin wrote about, JEPQ does offer some amazing exposure to the NASDAQ through an option income strategy, which has offered nice dividend income and some potential for upside. But some of the new ETFs out there nowadays do so even a little bit better. Now, my personal plan moving forward is to not necessarily sell any of my shares of JEPQ, but like I've been doing so, move my cash balance that I've been getting from dividends and distributions into other ETFs like the NEOS ones, which I'm honestly a massive, massive fan of. Now, like I said, I don't plan on selling my JEPI or JEPQ, but if I were to sell any of my higher income premium income ETFs specifically, it'd probably be the ones that are a little bit less tax efficient. So now that we went over all that, and I share with you guys why JEPQ might not necessarily be the GOAT, at least not anymore in the higher premium income ETF space. I most importantly want to hear from you down below. Out of all the higher income ETFs now that are in the market, and there's so many to choose from, what's your number one favorite one across all of them? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.